Hello, and welcome to another episode of Margin Called, the only channel on YouTube dedicated to controlling your losses in the stock market. I don't want to go over too much in today's video. Unfortunately, I was out of town on Tuesday, but as you can see from this chart, I did get back into the action yesterday and part of today. I did enter puts at one point today. Unfortunately, I didn't hold them as long as I could have or should have, and I missed out on some pretty incredible gains. But Wednesday was, for lack of a better term, a shit show just because of the price action that I had encountered, and I'll talk a little bit about that coming up. So, without further ado, I'll show you what exactly I was looking at Wednesday morning. Now, one of the reasons I was bullish, I wanted to get in on calls early just because of what I was seeing in the futures market, and I guess just the pre-market in general. We did see a pretty sharp surge to the upside, and we had basically broken through some previous zones of resistance. So overall, I was feeling pretty bullish about this. Unfortunately, what happened was I did get caught in this trap here. I did take a loss at first, and as I tried to make up for that loss, or at least try to break even for the day, I basically just got chopped around a little bit more. I finally eventually realized that what looked like what we were printing, at least in terms of Wednesday's price action, was this double top, which it did turn out to materialize as the day went on. Not a real sharp move to the downside, admittedly. But we did have a little bit of a nice rally. Again, totally missed all of this. And moving forward, let me see here. Here we go. So, oddly enough, this morning I was feeling pretty bearish. And again, looking at futures, which has been something I've been exploring a little bit more aggressively, at least in terms of price action and incorporating it into my analysis, I was able to see that it looked like the S&P had basically hit some resistance to the upside here. I want to see if maybe I can identify what it was that I was looking at on my chart. Yeah, so this is Thursday morning. Again, this is the SPY, and we're looking at a 10-minute time frame right now. But I use the alligator indicator to help me at least get an idea of what the direction is. Admittedly, I have the 200 EMA down here. Technically, I shouldn't be taking any sort of counter trend trades, so I shouldn't be trying to short the market. But I did think that this market was basically going into a little bit of a correction. And what really caught my eye was, in addition to just price being unable to get above where it closed the previous session, was just the fact that it seemed to be hitting these moving average lines, and they were acting as a type of ceiling, so to speak. Let me see if I can actually replicate this on another one of my charts that has EMAs as well. And let's see if we can get it on the 10-minute. Yeah, so on the 10-minute time frame, if you were to put a 21 EMA there, you can see we have basically downward momentum with the MACD. But again, the 21 EMA was basically acting as resistance, so I knew it had some room to move to the downside. Unfortunately, I was hesitant to really get in to a trade at this point, just because the market is basically in an uptrend. I'm not really confident enough, unless I see a clearer signal to really take a trade to the downside. But sure enough, if you look at the 3-minute and the 5-minute, just as the 21 EMA was acting as resistance, the 9 EMA was acting as resistance here as well. And sure enough, it just made a huge flush. Again, if you had puts, if you were trading futures, if you tried to short that, you would have made out very, very nicely on that nice move in the morning. So what I spent the rest of the day trying to do was trying to figure out, since I missed that move, where would be the next potential zone to try and short this market. So I made some paper trades, and unfortunately they did not work very well at all. It wasn't until later in the afternoon that I realized what we were printing here was a little bit of a, I guess you could call it a bearish wedge. So we have higher highs, and we have a few, higher lows, and we have a few higher highs. But it looks like once it got close to where the market had basically opened this morning, that zone of what used to be support was now acting as resistance. So once I saw that this was basically making another flush to the downside, I went in with some puts, but unfortunately I ended up just closing my position in this price action. In this price action zone, this chop. Unfortunately, you can't really call it a bear flag. I'm not really sure what you would call that, but I didn't want to take the risk of just getting my face ripped off in another rally to the upside, especially if there wasn't selling pressure, if sellers were not showing up to send the market down further. Now, unfortunately, if I had held on into the late afternoon, I could have made a lot more money. I think something in the zone of like maybe $1,500. But yeah, that would have been a very, very nice move to the downside. But like I said, I did get in at puts like right around here when it started to break through on VWAP. And since it wasn't really able to hold, I just said to myself, or at least since it wasn't able to go down further at that point, I said it's better to just take a few profits now and at least have something good to talk about. But yeah, it's been a little bit of a rough week. And admittedly, I think when it comes especially to options, I am going to be revisiting my strategy because I don't think I have the chops to consistently perform in the intraday scalping / day trading type of an environment. Which brings me to my next observation. With all of this selling going on, I thought it might be a good idea to maybe look at some of the other indices. Now, while QQQ is certainly interesting, I do like to check out the semiconductor space. And what I found was I guess for lack of a better term, interesting. So I did notice the previous days that we were kind of making a little bit of a wedgish pattern here. Let me see if I can draw another line. Can I get that to work? Is that kind of a wedge? I think I can get away with that. So we have a system or a series here where at least on the 1 hour time frame of SMH, we have a few higher highs, not really high. It's kind of looks a little flat at the top, but we do have a pattern of higher lows. So I'm thinking to myself, I'm guessing this is a little bit of a bilateral pattern. It does look like that it basically fell apart at the end of, I guess that would have been Wednesday's session because today's Thursday. So I guess if I was actually risky and intelligent, I would have taken a short position overnight. I really don't like holding short positions overnight, though. I've gotten burned so many times. But we did have confirmation that this structure basically failed, and it was basically getting a push to the downside. And I suspect that's why a lot of the S&P 500 as well, why that selling pressure occurred today. So what I decided to do then was to take, let me see if I can get the Fibonacci retracement here. I'll go to the previous low from July 6th, earlier this month. And when we bring it up to the high that was established, I guess that would have been, Tuesday or Wednesday. It turns out that price just closed at the 61.8% Fibonacci level, right around 152. I guess you could call that 50, whatever change that is. But it does look like that this could be a zone of support. And I'm giving very serious consideration to opening a long position here. Something else that I find very, very attractive about SMH in general is just the fact that the 200 EMA seems to be someplace where it's either definitely going to find support or it's essentially acted as a very reliable support system. So I think maybe I want to try to look at this a little bit more closely to see if there's any sort of buying pressure. But this definitely looks like an opportunity where I might want to go long. Something else to note here, we have a higher low, but when we compare it to the previous low, it looks like we might be getting oversold here. So that's something else I want to keep an eye on, the MACD. I guess you could call that hidden divergence when in an uptrend, if you have a higher low in price, but your momentum oscillator is making a lower low, that could be a very, very good buying opportunity. And I think I want to try to capitalize on that if I can. So that's basically all I've got for this video. Hopefully we can get the loss porn under control. I really like to maybe see if I can change the tide somewhat. Not the best way to start a YouTube channel, but yeah, if you've enjoyed this content, if you'd like to see more, I'd love to see your feedback in the comments. Please like and share the video, and subscribe to the channel as well. And just remember, whatever you do, don't get margin called.